Across to Chakri Lokapriya as well and find out what he's making of the market right now. Chakri, the FIs definitely are back with a vengeance, although the RIAs have been selling off late. But that aside, what is it that you're making of the market move off late? And does it seem like, that aberration that we had in the month of September and October, that's way behind us?
The market had corrected a good 10%, and that also reflects in the slower GDP growth. That means the economy is slowing down. So I think there is, all expectations aside, I think the need of the hour is not just a liquidity boost of CRR cut, but also a repo rate cut. So maybe there are some quarters of the market which believe that there will be a rate cut. And so all the interest rate sensitives, the industrials, banks, financial services, consumer discretionary, these are also are moving up. And we also believe that an interest rate repo rate cut is actually essential to boost up both corporate India and the economy.
Point taken. So that's the view coming in on India, the correction that we have seen, and of course what to make of it with the GDP correlation. But talking about some of these financial market ancillaries then, Chakri, yesterday those stocks were fairly excited. I know there are those initial trends going around that the dip in the F&O volumes on account of the on account of taking away of those weekly expiries hasn't been that much as expected. But do you think that warrants those 10% plus kind of moves that we saw yesterday?
If you look at within financial services, let's take, for instance, the power financiers, REC Power Finance. Now, these are relatively more secular in terms of their growth rates, loan growth rates, because infrastructure power where they lend to will be rather secure. Their cost of funds is lower, their stocks have corrected, they trade at about one-time book value. So, there's enough room for these stocks to go up. And the same story applies to some of the PSU banks like Canara and State Bank.
Right. Okay. Kunal, what a move yesterday on some of these market-related stocks, right? And we were chatting about that in the afternoon to BSE, CDSL, Angel One. Do you sense those kind of moves to continue today too?
Yeah, maybe not today, but I think over the next in a few days, there should be a follow-through price action because we've seen such kind of strong volume days for BSE, CDSL, etc. over the last many weeks and over the last many months. Generally, post that, you see as more of a subdued trading day. For these stocks, and then I think over the next week or so, these stocks they managed to rise up by a margin of 5% to 10%, depending on the previous trends where these stocks have given breakouts. But what has also happened for stocks like BSE etc. is that these stocks have come out of almost multi weeks of consolidation. So the good part is that when the markets were going through a corrective phase, these stocks were going through more of a consolidation, limited to a range for themselves. So I think a 5% to 7% band for a stock like, for example, BSE. And when the markets were getting into a uptrending mode, that's where these stocks have come out of the consolidation, and the volumes have been much more stronger on the breakout for these names, which means that we could be looking at a start of a trending move for these stocks. May not be today in terms of the same price action. But I think over the next 1 or 2 weeks, I would expect these stocks to move up by a margin of at least another 7% to 10% further.
Okay, point taken. So that's the view on these financial market ancillaries and the stock moves that we have seen. But Naresh, yesterday one of the big highlights for the market was the move in the IT stocks, and even if you look at the delivery volumes, they're not something which are which completely talk about a reversal in the sentiment, but definitely a lot of delivery based buying as well. What's your take on the IT stocks and what looks the strongest in terms of charts?
So there are two ways to look at the IT names. One is the recent strength which has been post June, and the amount of weakness if you were to take it to 2021 highs. So if you go back to 2021 highs, we are still lower than that for Infosys. We are say maybe 10% higher than those levels on TCS, the two large weights. Tech Mahindra is still lower, Wipro is still lower than 2021 highs. So there could be a lot of catch up in a lot of names across the board. So out there, Infosys could be the first one, which is still not crossed the 2021 highs and is on a good breakout possibility going forward. Then if you look at other names, they've continued to do well. So if you look at HCL Tech, it was say 1350, 1400 back in 2021. Today it is at 1900. So there are leaders and there are new leaders which could be formed. So I'll be more bullish on an Infosys and look out for a bounce in something like a LTI Mindtree, which is still 20-25% lower than the 2021 highs, or something like Birla Soft, which has corrected 30% from the top. So there are a bunch of names which can be looked at. Overall, the sector still looks extremely positive, new all-time highs. But one could be selective and have many choices here.
Right, okay. Chakri, what is it that you are making of this catch-up, if you will, that large cap IT is, playing with the likes of a KPIT, Persistent, and some of the other mid-cap IT names now? Do you think there's merit in investing in these names?
Yes, Aisha, absolutely. Both the mid-cap and IT and the frontline IT are looking extremely strong, fundamentally. That is, because, you have a new government in the US. There's going to be more IT budgets going to be released, more discretionary spending. All those macros are very well strong in place, and therefore, then the stocks are not overheated. Their multiples are still below peak multiples. The earnings are going to, most importantly, are going to accelerate. So given all this, HCLT, Infosys is looking good. KPIT, Cummins, Mindtree, their businesses are going to revive much more stronger than the frontline IT. So, all these stocks, I think, have enough tailwind to give you a 20% return for the next 1 year.
Okay, point taken. So enough tailwinds which are there for the next 1 year for the IT counters. But what else was doing well in the trading session yesterday was, of course, some of the cement companies which have been doing well. Select pharma names are also doing quite okay. But today, of course, we'll be watching out for a whole host of buzzers, right from a Borosil Renewables, which will be reacting to that anti-dumping duty as well. Chakri, are you looking at this space? And I mean, the entire energy transition theme, whether it's a Avari Energy, today the stock filter on that one has been revised to 20%. Borosil Renewable might be in focus on account of these anti-dumping duties. Any, top bets?
Clearly this is a space that has both corrected and as well as the secular growth outlook is very strong, and the anti-dumping will clearly help. And that's, of course, more temporary though. But I think the valuations are not cheap by any stretch. But, there's enough growth out there. So one could buy into a Borosil and also more into the EPC names like the Sterling Wilson kind of names.
Right, okay, those are some of the buoyant names in trade. In the meantime, let's just address some of the laggards as well. And Idea definitely saw a dip of about almost 4.5%. There was Adani Green, Divi's Labs, Shree Cement. Those were some of the stocks which did see an ebb off, and some of the insurance plays as well. They've been massive underperformers. There was no different yesterday for an SBI Life, or for that matter for an HDFC Life as well. Chakri, in this market, where is it that you're underweight?
Underweight, clearly, some of the frontline private banks, in terms of, valuations are not really corrected. FMCG continue to be underweight. And as a consumer, all consumer-facing companies. So basically, those are the sectors which are also very interest rate sensitive, and so staying away from them.
Okay, staying away from some of these names, just watching out for what else is happening. In terms of the newsmakers today, of course, there have been a couple of resignations as well from the likes of Nykaa, etc. But since we are talking about Nykaa and the entire consumption, let me actually toss it across to the conversation that my colleague Samita had with the management of Mintra, because lo and behold, even they are entering the quick commerce space and they're attempting to make those deliveries of outfits and apparels within 10 minutes.
Well, there's a new entrant into quick commerce, Mintra. It has launched its 30-minute rapid delivery service, which is called M Now in Bengaluru. Remember, the service will deliver apparel and accessories. And from Bengaluru, then, it will be expanded to Mumbai, Delhi and Pune in the months to come. It will be partnering with third parties so far as setting up of dark stores is concerned. In fact, Mintra is also looking at increasing its assortment from 10,000 items to about 1 lakh items over time. And Morgan Stanley, of course, has estimated the quick commerce market to be worth $42 billion by 2030. Perhaps that's what explains Mintra's entry into quick commerce. In fact, it's not just Mintra. Several other players have made their entry into quick commerce. In fact, venturing into fashion specifically, Mintra has shared a statement, and it says that we're truly grateful for Mintra's strong association with leading brands across the globe, which are at the center and front of catering to the evolving fashion aspirations of the country. Well, that's the word coming in from Nandita Sinha, the CEO of Mintra. Like I said, ladies and gentlemen, Flipkart piloted 10-minute delivery service called Minutes in Bengaluru. Then there was Big Basket as well that forayed into quick commerce with BB Now. There are others as well, like Reliance Retail, that's foraying into quick commerce via JioMart. And then there are car services, cab services like Ola that are exploring their entry into quick commerce with their own dark stores. So definitely this sector is all set to get heated up. There's going to be immense competition given the kind of players that are that we are seeing enter into the sector.
All right. Quick commerce. Everybody wants to be in quick commerce now. Easier said than done. Easier said than done. Chakri, is it time to look on the other side, which is that everybody is excited about quick commerce, fast delivery, but there's a large market for Sasta Sundar Tikau, right? Big box retail, traditional retailers, a D-Mart, a V-Mart. How about looking at those stocks?
Yeah, absolutely right. These stocks have been trading at a discount. Now, VMart, there has been talks. We've been seeing data points that there is some amount of rural recovery. For all the rural weakness, the stock had corrected quite a lot. The stock now has a very good footprint amongst the tier 2, 3, 4 level of cities. The valuations are fairly decent. So the one of the underlying factors of all these companies, the regular box retailers, is a lack of innovation to get this footprints people back into the stores. So that is what they're struggling with, and that has caused the multiples to go down. So I think that's the data point to look out for, is to see store innovations to bring back footfalls.
You've discussed the anti-dumping news, right, Anisha?
Yeah, on the Borosil Renewable, I did discuss with Chakri as to what his view is on energy transition. He's bullish on the likes of Sterling Wilson. But I think this is a bigger theme to watch out for, right, Nikunj?
No, I'm just thinking through that in terms of this news, what it means. I mean, that clearly means that anything which has got to do with China is actually getting into some, whether it was US putting a duty on graphite exports from China, India putting a duty on solar panels which would be imported. So I think that is where you are seeing a bit of a local duty, local industry protection which is coming via the entire duty route. Would be interesting to see that what happens to some of the solar panel manufacturers, especially the ones which are not backwardly integrated. What happens there? I mean, what happens to, let's say, Wari or Premier Tech, Premier Solar, where they are making solar panels, but they may not be backwardly integrated in terms of making the glass. So I think let's see how they also react and act right now. But Borosil Glass, pure play, that's the one where I think you will see a lot of constructive price action today in terms of an market. Kunal, I'll change the gears and then go back to a theme which we've been talking about. The penny stocks are making a comeback. Reliance Power up 3 days on the trot now. Suzlon seems to be cutting out. Vodafone has finally stopped falling. How much more elevation is left for a trader who is only looking for a trade, who's agnostic of the market cap or the name? He is only interested in price performance. Do you think there is another 15-20% move still left in these so-called patronized 2-digit stocks?
Yeah, Nikunj, that could be possible for many of these names. The price action, for example, for the likes of Suzlon, etc., the volumes which have been taking place into these stocks when these stocks have moved up higher, is slightly lower than what it was in the month of maybe August or September, when these stocks were into a very strong momentum backed up move for themselves. So that's the concern, which means that these stocks are moving up higher, but not on the back of an extreme kind of a participation, but on maybe an initial set of participation, that there could be an anticipation that the small cap end of the market would start to get a lot more vibrant, and you might see a tad bit of outperformance coming into the small cap names. What I also believe is that these moves, they generally go into more of a fatigue move, or or rather an ending move, when the large cap stocks show signs of fatigue. So as of now, we've not seen either of the two playing out. It's not as if that the large cap stocks are getting into a sideways or an underperforming range, and the money is moving back into these small caps, high beta penny stocks. And on the other hand, the volumes are also not very much high for these small cap names as compared to the previous relative swing highs when these stocks were in the month of August, September.
Okay, point taken. So we'll watch out for some of these names. But separately, what's happening is, of course, there are some negative news flow regarding Nykaa and Ola Electric. Nykaa, the fashion CEO, Mr. Neer Parekh, has actually resigned, and there have been a few resignations at the top, actually, to be honest, with Nykaa for the last few months. And then Ola Electric has got some additional, response from the CCPA, wherein they are needing some additional documents, etc. Naresh, what's the take on Nykaa and Ola Electric on the charts?
So Nykaa has been a stock which has not been able to recover back. we saw a little bit of a spike to that 220, 225 mark, and we are back to the 160s. 160 was the price almost a year back. So that whole move, which looked like a possibility of a breakout, has fizzled off. So for now, totally sideways. Ola Electric, not much technical data, but we've seen some bit of a recovery from 70 to 98. Volumes have been good in those. So for now, 80, 70, 80 could be the base going forward.
30 points higher for SGX. Looks like we are in for a very decent start, so to speak. Kunal, there's one stock which we've discussed and we've stopped discussing, and that is Tata Motors. Where it was versus where it is, and nobody's talking about it. Is the momentum out? I mean, has the stock in the short term really cracked in terms of momentum?
Yeah, Nikunj, definitely. So we say that the back is broken for the stock, at least for the very near term.
The back and legs and everything is broken, right?
Yeah, so because the stock was one of the best correlated stocks from the auto pack when the markets moved up higher. Now that correlation has gone to a negative zone for Tata Motors. So irrespective whether the markets are moving up higher, the stock moves into its own zone, own tangent. That's not a comfortable sign or a positive sign, of course, for stocks which are trying to re-establish their trend after maybe a 30% kind of a correction. So in the high for Tata Motors was around 1150, 1170 mark. In the month of August, September. From there, the stock had gone down to as much as 740, 750 levels, which means it's a very sharp correction of 400 points for Tata Motors in the span of the last 2.5 odd months. It's broken below a series of moving averages to 200 moving averages broken. So I think all of these data points indicate that the stock would take a lot more time to try and consolidate over here. Now the interesting bit which I've seen in terms of sector rotation is that generally a sector which goes into a reversal or a sudden sharp reversal, they tend to underperform for at least 3 months to 4 months on an average. And we've seen this pattern over the last, I think, 2.5 odd years, which means we've just ended 2 months or 2.5 odd months of corrective phase for the auto stocks in Tata Motors. Maybe another 1.5 odd month of underperformance could be at play for the stock. So in case if it double tests the support of 750 mark, or maybe tries to come back into that 700 territory, that could be a point where traders could look at a contra buy for Tata Motors.
Naresh, okay, the stock went from 300 to 1200, but 1200 has come to 800. Is Tata Motors now in oversold zone? Can it come back with the markets, Naresh?
So there could be a bounce back purely for the fact that it has corrected so much. But apart from that, what we'll see is when you've corrected 30% from the top, there is a tendency the stock after a bounce back goes sideways. So out here, the price point where I would expect a lot of resistance would be around the 900 mark, which is where it was on election day lows. If that is where it can sustain above going forward, then maybe we could call it as a reversal. But for now, it could get into a tight range, say 760 on the downside, 900 on the upside.
So what is looking good, Naresh, in the auto space then?
So the only name which has really been consolidating in the auto space is a new name, which is Eicher Motors. Mahindra and Mahindra has continued to be the leader, but Eicher Motors is someone which is showing relative strength to the whole two-wheeler pack. And the stock has been sideways around this 4,600 to 5,000, 5,100 mark. But there have been multiple attempts on both the sides. This could be a stock which could break out going forward. So it continues to be Mahindra and Mahindra, which has been the leader, and Eicher Motors.
Eicher Motors, and again, Mahindra and Mahindra, I think 1 month, 4%, 1 year, fantastic outperformance, 3 year, massive outperformance. Chakri, where is Mahindra and Mahindra headed? I mean, we think it's an auto company, but I keep on reminding our viewers that folks, they get less than 50% of the total business now from autos.
Yeah, absolutely right. That is a sum of the past story, but within the autos also there is this, and that's where the catalyst keeps coming for the business. And in terms now, it has again a new series of launches. Now, whenever the interest rate cycle turns, that is, there is an RBI repo cut. That's going to help, of course, all autos and Mahindra included. But I think the business momentum within its auto pack continues to remain very strong. Its SUV launches also still doing well. So valuation wise, I think all autos multiples have kind of moved up, and they'll kind of stay there because of various things happening at the industry level, like EVs.
Okay, watching out for that. A couple of these so-called value unlocking news coming in. One is, of course, the Canara Bank, wherein the RBI nod to divest stake in Canara Robeco has come through, and even the insurance some. So those IPOs might be impending for the markets. And the other one is for Edelweiss Financial, where an alternate asset subsidiary has filed for the DRHP as well. Kunal, would you have a view on the charts of these two names, Canara, Edelweiss Financials?
So I've been tracking both of these names. Canara, of course, I think is one of the, I would say, a candidate of a turnaround potentially, because the stock has shown signs of a major breakout in terms of the downward sloping trendline resistance. So over the last 6 months, 6 months approximately, from the June highs for stocks like Canara Bank, these stocks were going to a pattern of a lower high and lower low, very consistent towards the downward sloping trend line. And the stock has finally managed to break out of that downward sloping trend line, which is a very strong indication that the trend is restarting for stocks like Canara Bank on the upside. So I would be of the belief that the stock should be good for at least another 10 to 15% rally. 115 to 120 is where I've flagged off the targets for Canara Bank initially. So my sense is that the stock should move up higher from at least till those levels. Edelweiss, on the other hand, the stock has been extremely volatile. I remember, I think, a point when the stock was at 55 to 75 kind of a range, few quarters back. From there on, the stock has moved up significantly higher. The volumes have been very strong for Edelweiss. The stock has given signs of potential breakouts every now and then whenever the stock has come back into a resistance testing mode. So I believe even at current levels of 130 plus, the stock looks fairly attractive. More of a buy and dip strategy for Edelweiss, but I would probably expect that this trend could take the stock higher to almost 150 to 155 levels over the very short term.
Okay, we'll watch out for those levels on some of these stocks. Before we move forward, let's just quickly ask our technical experts to help us with their mid-cap strategies for the day. Naresh?
Continue to be bullish on Lemon Tree. The stock has slowly inched up and has given a breakout and sustaining well. Overall, the rest of the hospitality names have done well. So out here, looking at a move towards 155, which was the previous high, stop loss to be kept at 125.
About your mid-cap recommendations then?
So I'll go with the ban Angel 1. That's a chart which is looking extremely attractive. A confirmation of an inverted head and shoulder pattern breakout for the stock after yesterday's price up move. So targets of 3350, stop loss at 3100.
And Chakri, before we let you go, a last word coming in on any new themes, ideas, stocks that you are watching out for?
Yeah, I think I'll stick with Power Finance and REC, where they'll both an interest rate cut as well as loan growth looks very strong.
We'll let you go on that note. We'll watch out for PFC, REC as well. But time now to watch out for the news coming in from the national and international.
If you like this video, then like, share and subscribe to ET Now.